Value investors are set to come out on top in 2026, and here's why. We are more than 3 years into a new bull market, nearly 100% above the bear market lows. Plain and simple, the big early gains are already in hand. Because of that, the S&P 500 is pretty fully valued according to most every standard measure. But even worse, the mega caps and other high-flying AI stocks have insane valuations that call back the dot-com bubble just before things collapsed. But here's the good news. These extreme valuations in large caps are creating a rare investment opportunity in the year ahead. That is why today I'm sharing 3 extremely undervalued stocks that have exciting upside potential. These are businesses with PE ratios under 9 that combine deep value with healthy growth, all vetted by a 115-factor quant rating system. So who am I? My name is Steve Reitmeister, a 40-year investment veteran and editor-in-chief at WallStreetZen.com. Before that, I was executive vice president at Zacks.com, helping to make it one of the most respected names in the investment field. I've been featured on CNBC and Yahoo Finance, and yeah, I've been invited to the White House. By the way, I'm still pretty new to YouTube, so let me know if you like this topic by clicking like down below. I'll get to the stock picks, including Korea Electric Power, in about 20 seconds, but first, some very quick context about why it might be the prime time for value stocks. Major Wall Street firms like Bank of America and Stifel Nicolaus are issuing conservative targets for 2026. The average S&P 500 stock trades at a lofty PE of 22, while mega cap and popular AI names are extremely overvalued and stretch, often having PEs well over 100. The smart money is rotating early to undervalued names before the crowd catches on. We're looking for stocks the market has mispriced without cause, beating down prices on companies with strong fundamentals and real growth. That's our sweet spot. All right, let's get to those 3 undervalued stocks. First up, Korea Electric Power with the symbol of KEP. This is South Korea's largest utility. Yes, it's stable like most utilities. The kicker is that it surprisingly offers ample growth. Here's what really caught my attention. The current PE is only 8.8. The average utility, on the other hand, trades at a PE of 17. So you're getting KEP at half the price of its peers. It ranks in the top 1% for value in our Zen rating system, but here's the kicker. It also ranks in the top 3% for momentum and top 16% for growth. Very unlike most utilities. Utilities don't usually offer this kind of growth, but KEP does. The stock is only up 3% since the last earnings report, which was an impressive beat. So the market hasn't fully caught on to the growth story unfolding here. What's driving this? South Korea's energy transition and infrastructure spending. This kind of government backing means financial stability and lower risk. And our AI rating, which uses a neural network trained on 20 plus years of market data, puts KEP in the top 4% of stocks likely to outperform. That's not the only place it shines in our quant rating review. It's also in the top 60% for growth and top 3% for momentum, and yes, and top 1% for value. KEP is also delivering consistent earnings beats, which builds earnings momentum. In 40 years of investing, this combination is rare. You're getting a monopoly utility at less than half the sector valuation while it's still growing. This stock offers an electric combination of growth and value that should have the price soaring in 2026 and beyond. Now, if you like the sound of KEP's upside potential, then you need to see what else I've put together. I've created a list of stocks our system shows could potentially double in the next 12 to 24 months. The link is in the description and the pinned comment. Click on it now for the full list of stocks. All right, let's get to the undervalued stock number 2, Bausch Health with the symbol of BHC. Bausch is a pharma company with a focus on eye health, gastroenterology, and dermatology treatments with a $2.56 billion market cap. The PE is a shockingly low 7.1, but the PEG ratio, which is known as the price to earnings growth ratio, is even more impressive at only 0.12. Translation: Bausch is trading at only 12% of its growth rate. That's absurd and strongly tips the scales in our favor with these shares. Given what I just shared, it should be no surprise to anyone that this is in the top 1% of stocks for value according to the Zen Ratings AI-driven quant model. Gladly has also scores in the top 14% for growth, but here's what really caught my attention. 99% of insider transactions the past year were purchases, not sales. Purchases. Few tips off in investing are as golden as insider purchases. So this part says that management is all in, which means a lot going forward. Now, let's talk about what's happening with the business. They recently refinanced their debt, improving their balance sheet. They bought out their Chinese distributor, thus streamlining operations. And management clearly sees value here at these prices, hence the insider buying spree. When management is buying with both hands at these kind of valuations while the business is improving, I'm going to pay attention. And you should be too. Plus, our AI factor puts them in the top 4% of stocks likely to outperform. Look, if you're still with me, you're serious about finding undervalued stocks with real upside potential. Hit that subscribe button and get notified when I release more videos. You'll get stock picks and strategies backed by real data, not hype. All right, final stock, let's go. We are going with Herbalife with a symbol of HLF. Dietary supplements. Yeah, I know the controversies. Let's talk about the numbers. The PE ratio is only 4.6. Thus, Herbalife is trading at literally 80% lower than the stock market average. Not surprisingly, it ranks in the top 1% for value according to Zen ratings. More interesting is in the top 2% for financial strength. That top 2% of the financials means it has one of the strongest balance sheets we track. Here's the other part. 7 straight quarters of earnings beats. Impressive profit margins every time. This is a mature, stable business in turnaround mode. It ranks in the top 18% for safety and top 11% for sentiment, meaning the smart money is getting on board. The market is finally waking up to what we've been seeing in the data. 7 consecutive earnings beats showing consistent execution. The balance sheet is rock solid. Turnaround momentum is accelerating, and at only a PE of 4.6, there's massive upside if the sentiment continues to shift in their direction. Look, Herbalife isn't sexy. It's not AI, it's not crypto, it's not what people are talking about on Twitter. But with such a low PE, strong balance sheet, and a 7-quarter earnings beat streak, the window for this attractive entry price could be closing fast. All right, let's put these 3 things together. Here's what we have. Korea Electric Power, PE of only 8.8, ranks in the top 2% overall. The safety of government-backed utility with ample growth as the bonus. Bausch Health, PE of only 7.1, PEG ratio of only 0.12. 99% of the insider action is buying over the past year, improving fundamentals with debt refinancing and operational improvements. And finally, Herbalife, PE of 4.6, top 1% for value, 7-quarter earnings streak, and turnaround unfolding. What these all share? The market has mispriced them. Our Zen rating system found them, and they all rank in the top 2% of the 4,600 plus stocks tracked in the system. Deep value plus real fundamental catalysts, that's the combination that works. Now, I just showed you 3 very different stocks, a utility, a pharma company, and a supplement maker. Drop a comment below and tell me which one of these 3 stocks is most appealing to you. Or tell me if you think I'm crazy on any of them. The point is that I read every comment and would love to know your thoughts. You know, people ask me all the time, how do you find these stocks? Like there are thousands of stocks out there. How'd you narrow it down to just these 3? Honestly, I've been doing this long enough that I built some shortcuts. We run these portfolios at Wall Street Zen. We call them the Zen strategies. 11 strategies in total. Each focuses on a different style like growth, momentum, income, small caps, and more. These 3 today came from our value strategy. It's just looking at those 115 factors I mentioned earlier and filtering for the value plays that also have the strongest fundamentals. What used to take me weeks now takes just mere minutes, and the track record is stellar at 25% gain per year going all the way back to 2003. There are 11 of these strategies in total, each focused on the top 7 stocks each, culminating in finding the best 77 stocks updated daily. Something for every type of investor and every market condition. If you're curious, there's a link in the description. But the point is, having a systematic process makes it way faster to separate the real opportunities from the noise. That's really all it is, just a consistent way to find what's working now. One more thing. You want to see how I'm playing the AI boom with undervalued stocks? Then watch this video coming up next. I break down 3 exciting AI stocks trading at a mere fraction of NVIDIA's valuation. These are the perfect complement to the value plays I showed you today.